Hey there, welcome to our video on investing in the Australian share market. Today, we're going to be sharing 10 key points to help you make informed decisions when investing in the market. Whether you're a seasoned investor or just starting out, these tips will give you a solid foundation for navigating the Australian share market. So let's dive right in. Point 1. Understand the basics of the Australian share market. Before you start investing, it's important to understand the basics of the Australian share market. This includes things like how the market operates, who the major players are, and how to read stock prices. The Australian Securities Exchange, ASX, is the main exchange in Australia where shares are traded. The ASX is made up of over 2,000 companies, which are divided into different sectors like banking, mining, and healthcare. Understanding the different sectors and how they interact with one another is key to investing in the Australian share market. Shares in these companies are bought and sold by investors through a stockbroker. Shares can be classified as either common shares or preferred shares. Common shares give investors voting rights and the opportunity to earn dividends, while preferred shares have higher priority for dividend payments and usually have no voting rights. Point 2. Determine your investment goals and risk tolerance. Investing in the share market can be risky, but it can also be rewarding. Before you start investing, it's important to determine your investment goals and your risk tolerance. Do you want to invest for the long term or the short term? Are you comfortable with high-risk investments, or do you prefer a more conservative approach? Knowing your investment goals and risk tolerance will help you make better investment decisions. Risk tolerance refers to how comfortable you are with the potential for loss. Generally, higher risk investments have the potential for higher returns, but they also carry a higher risk of loss. Investors with a low risk tolerance may prefer to invest in less volatile stocks or bonds, while those with a higher risk tolerance may be more willing to invest in riskier assets. Point 3. Diversify your portfolio. One of the most important things to remember when investing in the Australian share market is to diversify your portfolio. This means investing in a variety of different stocks across different sectors and industries. Diversification helps reduce risk by spreading your investments across a range of different assets. This way, if one stock or sector performs poorly, your entire portfolio won't suffer. To diversify your portfolio, you can invest in stocks from different sectors and industries, such as healthcare, technology, and finance. You can also consider investing in exchange-traded funds, ETFs, or mutual funds, which provide exposure to a range of different stocks or asset classes. Point 4. Do your research. Before you invest in any stock, it's important to do your research. This means looking into the company's financial statements, earnings reports, and market trends. You should also read up on the industry and any major competitors. This will give you a better understanding of the company's performance and help you make informed investment decisions. One way to research stocks is to use fundamental analysis, which involves analyzing a company's financial statements and other relevant data to determine its value. Technical analysis, on the other hand, involves using charts and other technical indicators to identify buying and selling opportunities. Point 5. Monitor your investments. Once you've invested in the share market, it's important to monitor your investments. This means keeping track of your stocks, watching for any major market changes, and staying up to date with industry news. Monitoring your investments will help you make informed decisions about when to buy, sell, or hold your stocks. You can monitor your investments by checking stock prices and company news regularly, as well as setting up alerts for any major market changes. It's also important to review your portfolio periodically to ensure it remains diversified and aligned with your investment goals and risk tolerance. By monitoring your investments, you'll be able to make informed decisions about when to buy or sell your stocks and make adjustments to your portfolio as needed. Point 6. Be patient. Investing in the Australian share market requires patience. It's important to remember that the market can be volatile and stocks can rise and fall rapidly. It's also important to resist the urge to make quick, emotional decisions based on market fluctuations. Instead, focus on your long-term investment goals and be patient with your investments. Patience is a crucial element of investing in the Australian share market. It takes time for investments to grow and generate positive returns, and there will inevitably be periods of market volatility and uncertainty. As an investor, it's important to resist the urge to react to short-term market fluctuations and instead focus on your long-term investment goals. By staying patient and maintaining a long-term mindset, you can ride out market fluctuations and position yourself for success over the long term. Point 7. Understand the tax implications of investing. Investing in the Australian share market can have tax implications. It's important to understand the tax laws and regulations surrounding investments, including capital gains tax and dividend imputation. You should also consult with a tax professional to ensure you're making informed decisions about your investments. When investing in the Australian share market, it's important to consider the tax implications of your investments. This includes understanding how dividends and capital gains are taxed, as well as any deductions or credits you may be eligible for. Different types of investments may have different tax implications, so it's important to consult with a tax professional or financial advisor to determine the best tax strategy for your investment portfolio. Point 8. Consider working with a financial advisor. If you're new to investing or are unsure about how to proceed, consider working with a financial advisor. A financial advisor can help you set investment goals, develop a diversified portfolio, and make informed investment decisions. They can also help you navigate the complex world of tax laws and regulations. If you're new to investing in the Australian share market or feel overwhelmed by the complexity of the market, consider working with a financial advisor. A financial advisor can help you develop a personalized investment strategy based on your unique goals, risk tolerance, and financial situation. They can also provide ongoing guidance and support as you navigate the market and make investment decisions. While working with a financial advisor does come with fees, it can be a worthwhile investment for those who want professional guidance and support. Point 9. Start small and gradually increase your investments. When starting out in the Australian share market, it's important to start small and gradually increase your investments. This will help you learn the market and become more comfortable with investing before making larger investments. It's also important to only invest what you can afford to lose, as the share market can be volatile, and there is always a risk of losing money. Point 10. Stay informed and keep learning. Finally, it's important to stay informed and keep learning about the Australian share market. The market is constantly changing and evolving, and it's important to stay up to date with industry news and trends. Consider reading financial news websites, attending investment seminars, or even taking a course on investing. The more you learn, the better equipped you'll be to make informed investment decisions. The Australian share market is constantly changing and evolving, so it's important to stay informed and keep learning about the market and its trends. This can involve reading financial news and analysis, attending seminars and conferences, and consulting with financial advisors and other experts. By staying informed and keeping up to date with the latest trends and strategies, you can make informed decisions about your investments and adapt to changes in the market over time. Additionally, continuous learning and education can help you build your investment skills and knowledge, making you a more effective and successful investor in the long term. In summary, investing in the Australian share market can be a rewarding and profitable experience, but it requires patience, a long-term mindset, careful planning, and ongoing education. By starting small, gradually increasing your investments, working with a financial advisor, staying informed, and being patient, you can position yourself for success in the market and achieve your financial goals over the long term. So there you have it. 10 key points to keep in mind when investing in the Australian share market. Remember to understand the basics of the market, determine your investment goals and risk tolerance, diversify your portfolio, do your research, monitor your investments, be patient, understand the tax implications, consider working with a financial advisor, start small and gradually increase your investments, and stay informed and keep learning. By following these tips, you'll be well on your way to making informed and successful investments in the Australian share market. Thanks for watching.